equities fell on Wednesday ahead of the U.S. Federal Reserve's interest rate decision. The Nikkei 225 in Japan slipped 0.57%. The official data show that Japanese retail sales surged 9.1% last month as compared to a year earlier, above expectations of a 6.9% increase. South Korea's Kospi closed 0.59% lower, in part as shares of Samsung Electronics fell nearly 1.4% ahead of the earnings release. China's Shanghai Composite slipped 0.5%, Hong Kong's Hang Seng Index shed 0.48%, Australian S&P ASX 200 slipped 0.83%, Consumer Price Index in Australia rose 0.5% in September after a surge by 0.6% in the previous month. The MSCI Asia ex-Japan Index traded 0.26% lower. And as for developments on the trade front, investors were spooked by reports that the Phase 1 trade deal may not be signed in a November summit in Chile, as was planned earlier. On the other hand, a U.S. administration official highlighted that if it's not signed in Chile, that it does not mean that it falls apart. Also, China accused the U.S. of bullying over a proposed ban on Chinese telecom equipment in the U.S. networks. These signals added to uncertainty and capped a risk on sentiment as a result. In Europe, stocks traded mixed to lower. Investors expressed caution amid negative trade developments and ahead of the Fed's decision and fresh corporate earnings. The Pan-European Stock 600 closed just 0.06% higher, with banks shedding around 2% amid a plunge in Deutsche Bank shares. The FTSE 100 in London and French CAC 40 both managed to strike gains of 0.34% and 0.45% respectively. The UK confirmed it would hold a general election on December 12th after Prime Minister Boris Johnson gained approval from Parliament. As for corporate results, Deutsche Bank reported a net loss of 832 million euros for the third quarter, which was mainly due to a restructuring plan. By the end of the day, the bank's shares plunged nearly 8%. Credit Suisse reported a higher than expected third quarter net income of 881 million Swiss francs, a 108% increase from the same period last year. Meanwhile, Convatec rallied over 10% after revealing solid third quarter results. And in the US, the Dow gained 0.43%, the S&P 500 added 0.33%, the same as the Nasdaq Composite, as investors cheered the Federal Reserve's tone after the third rate cut this year. The central bank kept the door open to further cuts and raised the bar for further policy moves moving forward. In fact, monetary authorities signaled a pause to rate cuts as they removed a phrase from the statement about sustaining the current expansion. At the same time, Powell highlighted that inflation would need to rise significantly before the central bank thinks about hiking. The latter phrase served as a bearish catalyst for the greenback, with the currency turning lower across the board after the press conference. Against this backdrop, the euro-US dollar reversed earlier losses and jumped to the 1.1150 area. Immediately after the Fed's decision, the dollar staged a modest and short-lived rally, which reversed quickly afterwards. In a knee-jerk reaction, the USD Japanese yen rallied to early August highs around 109.30, but was soon rejected and got back below the 200 EMA around the 109 psychological level. The pair, however, closed marginally lower on the day at 108.80. In general, the local downside pressure on the greenback could be short-lived as the Federal Reserve hinted at a pause in cutting rates down the road. As for oil prices, Brent crude failed to challenge the $61.50 intermediate resistance and accelerated downside move after some consolidation earlier in the day. The driver behind the selling pressure was the Energy Information Administration report that pointed to a crude oil inventory build of 5.7 million barrels for the week to October 25th versus the expected build of 729,000 barrels. Meanwhile, gasoline inventory shed 3.0 million barrels. Also, some pressure came from the U.S.-China trade front amid some doubts in striking a Phase 1 deal as early as next month. Brent received support around the $60 psychological level and is yet to confirm a local bottom, as the sell-off may reemerge in the short term should the U.S. and China fail to report further progress towards a preliminary deal. That is all for today. Thank you so much for watching. Please click subscribe to always be in touch with the latest market news.